Global markets head into the North American session with geopolitical developments in the Middle East continuing to dominate sentiment after another round of U.S. and Iranian strikes kept tensions elevated. While the renewed escalation initially supported safe haven demand, markets have taken some comfort from fresh comments from President Trump suggesting Iran is seeking to return to negotiations, tempering fears of an immediate broadening of the conflict. Even so, uncertainty surrounding the Strait of Hormuz remains high, keeping a firm geopolitical risk premium embedded in energy markets as oil prices extend their recovery. U.S. equity futures are modestly firmer as investors cautiously welcome signs of possible de escalation while balancing the risk of further headline driven volatility. In FX, the U.S. dollar is trading with a softer tone after Wednesday's hawkish FOMC minutes ultimately failed to generate a sustained bullish reaction. While policymakers continue to signal that additional policy tightening may still be required to return inflation to target, markets were not presented with any material upside surprise, prompting a modest pullback in the greenback and allowing the euro, sterling, and commodity-linked currencies to recover ground. Meanwhile, the Japanese yen remains the notable underperformer as wide U.S.-Japan yield differentials continue to dominate price action despite growing intervention concerns from Japanese authorities. Across the major economies, attention has also been on Japan after the Bank of Japan maintained its assessment for all 9 regional economies, reinforcing the view that activities continues to recover moderately despite rising concerns over the impact of higher energy costs and weaker exports. Firms continue to report strong wage growth, although many are becoming more cautious about sustaining pay increases as Middle East driven input costs filter through the economy. At the same time, Japanese officials reiterated that they are moderating financial markets with a high sense of urgency, underscoring growing sensitivity around the yen's persistent weakness. Looking ahead, the North American calendar is relatively light, with U.S. weekly initial jobless claims representing the primary economic release. While the data is unlikely to alter the broader policy outlook unless it deviates materially from expectations, investors will also closely monitor remarks from Federal Reserve officials John Williams and Lori Logan for any additional guidance on the interest rate outlook following the FOMC minutes. Beyond scheduled events, geopolitical headlines remain the key wildcard, with developments involving the U.S., Iran, and the Strait of Hormuz likely to remain the dominant driver of cross asset price action into the end of the week. That's all for now.